Have you ever looked at a candlestick pattern and are confused on what the candlesticks are saying and what those long sticks are, what they mean, and what's going on? So in this video, we're going to be taking a look at what those candlesticks mean. We're going to be taking a specific look at one candlestick pattern. It's called the hammer or the hanging man. They look visibly the same, but they have different use cases. They're shown in different scenarios. So we're going to be taking a look at what happens in those candlesticks and what those candlesticks mean when they are presented to you in an actual chart. So without wasting any more time, let's get started. Before we do start, please do make sure to hit the thumbs up button and also subscribe to our channel for more upcoming informative videos like this. So let's get right into the video and let's head over to our screen. So we are now over at our screen and we are on a website called babypips.com, and as you can see, we are on a specific article talking about single candlestick patterns. So there are many different types of candlestick patterns, such as Mosberus, spinning top, dojis, hanging man, and in this specific video we're going to be talking about the hammer and hanging man. So let's get right into it and let's talk about what these look like. So the hammer and hanging man look exactly alike, but they have totally different meanings depend on the past price action. So as you can see in this visible representation, that a hammer and a hanging man look visibly the same thing. So they have this long edge right here, this long line, and they have this small body up to the top, and it's only a very small portion of the body. So both have cute little bodies, black or white, long lower shadow. So this part right here is called a shadow of the candlestick, and a short or absent upper shadow. So this upper shadow to the top right here, it may be very small or it may not even be visible at all. So this is the smallest portion of the candlestick, and then we have the body, a bigger portion, not too big, but it is also very small, but it is longer than the upper shadow. And then we have this lower shadow, which is the longest part of the candlestick, making it recognizable, how we can tell it is a hammer or a hanging man. So now let's take a look at the difference between them. So as you can see, on the left side we have the hammer, on the right side we have the hanging man. So let me zoom in and let's take a better look at what's going on. So right here on the left side is the hammer, and we can tell that it is a hammer based on the previous action. As said before we came to this part, that we can tell which one is a hanging man or a hammer based on the previous price action. So the black means red price action, just to make sure. The black means red and the whites mean green price action. So in the hammer we usually have a red price action before we get to the hammer, before we see the signal. So as you can see, we have continuous black candles right here, just one green candle or one white candle. Let's just say white for the sake of this tutorial. We have continuous downwards action, just a little upwards action here, and then downwards action again, and then we see the hammer. So this, as you can see, we can identify the hammer by looking at the upper shadow. There is no upper shadow in this case. We have a small body on the green side, so it is white, making it more obvious that it is a hammer. And then we have the long shadow, confirming that this is a hammer, and we can finally predict the upcoming move. So if this is a hammer, we can predict that this is a market reversal and the market will now head in the upwards direction. So in the previous price action, the price was coming down and we saw the hammer, and then we saw market reversal. So a hammer on the bottom of the graph means a market reversal. And if we take a look at the other scenario, the hanging man, this is a different in the other case. So before we see the hanging man, we see upwards price action. We see white candles, mostly white candles, just a little black candles here and there, but we see mostly upwards price action before we see the hanging man. So we saw this price rising and rising, and then we see the hanging man on the top right here. So how can we tell it's a hanging man? The very little upper shadow right here, we can see it's very tiny. We have a decently small body right here. It is black, basically saying that it is red, and it has downwards price action. And then we see the long shadow as we usually see in a hanging man. So we can confirm that a market is about to get reversed again. We are about to head in the opposite direction as we were going before this pattern started. So before this, we were seeing upwards price action. We see the hanging man, and then we head down. So this was basically a demo of what the hammer and hanging man look like in an actual graph, and what they predict about the upcoming move. So let's just read this bottom part right here. The hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out of a bottom. When a price is falling, hammer signals that the bottom is near and the price will start rising again. And the long shadows indicate the seller pushed price lower. The buyers were able to overcome the selling pressure and close near the open. So just because you see a hammer form in the downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it is safe to pull trigger. So you have to wait for the confirmation that we started seeing the reversal before you place a buy order. A typical confirmation would be to wait for the white candlestick to close above the open on the right side of the hammer. So this is the criteria to determine a hammer. So a recognition criteria, we can see the long shadow is about 2 or 3 times the body, so we have a bigger long shadow at the bottom. It has little to no upper shadow. The real body is at the upper end of the trading range. The color of the real body is not important. So the color of the real body is not that important. It could be green or red. So that's what our hammer basically look like. And now let's talk about the hanging man. The hanging man is a bearish reversal pattern, so that means it starts reversing to the downside now. That can also mark the top or a strong resistance level. When the price is rising, the formation of hanging man indicates that seller is beginning to outnumber buyers. So let's just move over this we already talked about in the hammer, and let's talk about the recognition of the hanging man. Basically the same thing. We can see the last part is the most important. The color of the body is not important, though a black body is more bearish than a white body. So if we see a red candle, that means the price will go even below if we were to see a green candle. So that's what basically differentiates the hanging man and the hammer. So that was about it for this video, guys. In this video we did talk about two specific trading patterns and the two different candlesticks. They look exactly the same, but they have different use cases. They're displayed in different parts of the chart, and we did talk about what their similarity is and what the difference is. So that was about it. So if you did enjoy this video, please do make sure to hit the thumbs up button. Drop a comment down below on what type of more videos you guys want to see, what topic should I cover, and also don't forget to subscribe to our channel. So thank you guys so much for watching, and see you in the next one.